Hello, my name is Matthew Mickey, and I am a retired disabled combat vet. And I come from a very diverse background. If you haven't already and don't know me, Google Matthew Mickey and read some of the articles that were written about my background. And this doesn't include like what happened in the Army. I have a very outstanding story within my service, and I've served with some of the most awesome barrel-chested freedom fighters that ever existed. And so, as I try to figure out what I'm going to do as an adult in my adult job and try to find an adult job, like I said, screw it. I'm just going to launch this nonprofit that has been in my mind for a long time. And so this is the official video of Trading for Veterans and Service Members, TFVS. And it all started because I have traumatic brain injury, and that's from getting blown up 6 times by IEDs, roadside bombs, getting a concussion from an airborne jump, and then getting hit by a car in New York City. And along with a bunch of other injuries that I accumulated through 20 years in the service, I started making these videos to retain the knowledge that I was learning, and now I'm here. As I launch the first ever video for TFVS, I would like to give a quick shout out to my sponsor, Tim Boy from Blue Shirt Plus, Tony from Dialect, and then I would like to give a special thanks to people who have helped support me throughout the years. Oliver Kill, the 2020 World Equity Trading Champion, JJ and Steve from Micro Futures, Darius Dell from 42 Macro, Alfonso Panicchio from the Macro Compass, Juan Wang from the Fed Guy, and then Robbie from Trading Well, and many other more, Jim Croissant, Sergio Perfralia. I always mess his name up. But anyway, if I didn't get to you, I'm going to be giving shout outs every video that I ever make, right? And these people were a huge impact on teaching me the business cycle and the business agenda of the financial markets. Now, these videos are not going to be my typical 10-minute long videos that I usually do on YouTube. If you get distracted easily after 5 minutes of watching them, I encourage you to take notes and learn the material and focus on what I'm trying to teach you. Just like in the military, your studies, rehearsals, and planning should be more complex, more attention to detail, and incorporate every possible scenario planned for. So when you hit an objective and bullets start flying, you can push all the adrenaline and emotion aside and have emotional intelligence as you respond with coordinated fire, synchronizing assets, and closing within and destroying the enemy like it is a well-rehearsed ballet. Always represent your work with a scholarly approach, rehearse like an athlete, and control your emotions like a gentleman, and as you find the devil in the details. If you're already distracted from this video, then I encourage you that this ain't for the faint or weak of heart. Trading and managing your own portfolio investments are tough. It's hard work. Be like soldiers who attend Ranger School. You either have a Covenant Ranger tab that shows you were subject matter experts at small unit tactics and was looked at as a well-disciplined barrel-chested freedom fighter with grit, flexibility, and resiliency, or you left the school tablets with a story and an excuse. Moving on to today's lessons. As with every class given, I am taking my mindset from a professional trading approach, and that is always downloading the free data from the world regarding the topics. The material that I know was free, the data that I use is free, and this is because I learned this concept in the military. Why would I spend extra money to buy a cool guy kit for war when my young soldiers who got paid $300 every 2 weeks would now feel the pressure to have to spend the $300 on cool guys got stuff because they see me, their leader, buying it. So why spend money on a $50 drop pouch and have my soldiers spend $50 on a $50 drop pouch because they saw their combat experienced leader do it? No, I utilize my balance of art and science in the Army by using the Army-issued equipment and making it work for free. We will take the same approach with trading. Once you do it so many times, it becomes muscle memory and will save your tail when you need it the most and stuff is chaotic. That $100 you spent on live data or charting services or indicators, write it off as a stupid work expense on your taxes, because we do the legwork in this course so we can learn the details of the profession. Take the extra money service fee and invest it, because here at Trading for Veterans, the trading platforms that we use are for placing trades only. Our brain is to build logical responses and decisions and idea generation. Excel is for the math needed to be done for us ignorant grunts. Alright, so we're going to download data from free public sites for the S&P, sterling, the USD, the euro, and all the major currency pairs and indexes. We will then export it into Excel and manipulate it so we fully understand the data in the market we are about to enter and what opportunities there are to make money over different time horizons in the market. We are painting the picture of what has happened in this class and studying the film of our opponent with historical volatility. So historical volatility of any given market tells you your odds and what you should expect. Doing this approach will do a few things. It will prevent you from overtrading by clicking through charts and having easy access to trading and only trading without data. It will teach you to take a systematic approach and see the risk. It will slow you down by forcing you not to prop or day trade. And I'm not knocking day trading, I'm just saying there's a time and place, and we will discuss when that time and place is in the implied volatility class. It will teach you how to run distribution and work out the odds of making a certain amount of money so you can actually probability adjust your risk, which leads to you building and managing your own expectations. This top-down approach will let the numbers speak for themselves. Just like if I had a full combat load of ammo, I would shoot back at the enemy without any concern of ammo, without being cognitive of my round count, versus me having one magazine left. I would slow my breathing, position my body correctly, maintain proper sight, picture, and trigger squeeze, and turn myself into a stabilized platform so every round I shot counted. So let's look at the S&P 500 and look at the daily returns. Don't worry, I'll walk you through how to do this in the next video workshop, right? The S&P is the average return for 500 stocks, and we're going to go over the data for over 60 years, right? Over a massive data set, each of the 500 stocks within the S&P will drift towards the average of the S&P's daily average return. Now, where did I pull this data from? Listen, I can't tell you that. It's the top secret site. You have to have a secure line to use it. It's called Yahoo Finance. You probably haven't heard of it, right? Type in S&P, historical data, daily get price, scroll down, export to Excel, and you get the open, high, low, close. Now, in this case, we're going to be interested in the open and close, right? Because we're going to be measuring if we had bought at the open and sold at the close, because not many traders can buy the high and sell the high and buy the low, or buy the low and sell the high, right? So now we are looking at the daily volatility for over 50 years. We will use performance gates, which are the daily returns, to see what the distribution is from a negative 0.5% to a positive 0.5%. We have 9,880 trading days out of a measured 15,177 trading days. You have from negative 0.5%, you have 1,000. The zero, you have 1,809. 0 to 0.5%, you have 4,143. All right. You get the returns of half of those trading days, right? Now let's multiply through the frequencies. You get the average return of up days versus down days. The average return comes out to 7,894 up days versus 7,002 down days. Now, let's total the up days versus the down days. 0.3% marked down, -32% marked up. So the last 50 something years, the market has been up thousands and hundreds of percent, but your performance, if you traded every day, would not have made money because the market wasn't 80% of the time up and 20% of the market down. Normal distribution, the first standard deviation is 68.2% of the time. The stock market is way off from that, with more peaks around the mean and fatter tails and the vacuum in the middle. So this tells us the first standard deviation is 78% of the time the market moves, and 0.35 and 20% of the time something happens to make it move up or down in an extreme way. Now this shows the behavior of our opponent that we're about to match, right? We're about to trade. So let's work out some gross numbers of buying the open, selling the close. Every day the odds of making 0.5% was 4 to 1. To make 1%, it was an 11 to 1. Shorting, to make 0.5% was 4 to 1 odds, and to make 1%, it was 9%. So we saw on the curve, that makes sense because we saw on the curve, it moved up more, it moved positive more than it moved negative, right? And these numbers aren't including commission, The beast just told you that 80% of the time it sleeps and 20% of the time it wakes up. 1 in 5 days, make money. And historical volatility shows us that 20% is due to a macroeconomic reason in the world, and the beast wakes up, and moves. So opportunities are there, but now we know we have a better chance of making money by extending our trades over a longer time horizon. Like 1 to 3 months. When volatility is low, be a portfolio manager. And when the beast wakes up, look for short-term strategies. Remember, portfolio managers love low volatility. Portfolios managers' worst nightmare is high volatilities. Now try these with Forex, stocks, and cryptos. Now historical volatility is usually looked at from a 30-day past performance. Guess what? Your leverage does not change the odds. It just means if you fight against the beast will wipe you out faster. So now that we learned this, turn the odds in your favor and take the odds of the bookmaker, not of your own personal feelings. Take the open and close from a day trade approach. The odds are against you by 35 basis points up or down. I hope you see that very few opportunities occur on a one-day basis. Stack the odds in your favor by extending your time. Okay, so now most of you guys are probably wondering, why did this dude just teach historical volatility in his first approach? In his first series is going to cover historical versus implied versus with 8 average true range and all that. Well, listen, this was an example that should show you that everybody strays away from the math and the volatility because it seems hard. Well, I'm showing you through this series that this is a critical tool that lets you incorporate risk mitigation, and it needs to be focused on all your trades. All right, but in the future, though, we're going to be taking this approach to teaching. We're going to start off with the government and looking at the Fed Reserve and what their mandates are and how to spot their liquidity cycle from the bond market. Then we're going to move to an economic, business, and consumer approach and find a world view that tracks the growth of the U.S., the Eurozone, and China from a leading macro indicators. Then we'll move into the manufacturer and service, the industry views, and we'll look at how we can find global sector selections using equities, forex, futures, and bonds. Then we will find, are we going to target cyclical or defense, and then we do our rehearsals. Now we can look at a chart, fundamental, technical, and price analysis of the asset that we're trying to trade. And then from there, I'll teach execution on and management on the objective, which is your trade management and your risk management. And then after that, we'll go into how to maintain good after action reviews. And so for this program, we will be doing monthly Zooms that cover one of the phases in detail. Each topic will have a dedicated video write-up and Excel spreadsheet to help you learn. And each topic will have a workshop to show you how to pull all data for free, along with me coordinating with people from the business to come in and be a guest speaker. All right, guys, I hope you guys enjoyed this. Later.